Hello, hello, YouTube. I'm excited to be here today because I have a strategy that has worked for me in the most fabulous way in the stock market. It allows me to make money consistently every day, whether the market goes up, it goes down, it stays the same, doesn't matter to me. All I know is that as long as you know levels, as long as you learn what I'm going to teach you, you're going to be able to do this as well. Right, so let's get started. Let me show you though how much I've made so far. So far, I have made, 50,000, look at that. I even surprised myself. 50,000 up to date. And let's see, this is how I started January. You can see weekly, first week about 5,000, almost 6,000. Third week here, 6,000. Fourth week, almost 4,000. And this last week was a good week for me in January. I did have one loss, which I want to point out because let's be honest, I'm not going to sit here and say I'm 100% perfect because none of us are. And it's with the territory when it comes to the stock market. But what I will say is that this is consistent where you can make your money back pretty quickly, as you can see. So I had 1,000 losing day. No big deal. February, I had 2 losing days. But overall, you can see 4,000 was 5,000, 3,000, 3,000, 2,000. And then March, here we go. March again, 2,000, 4,000. And today I actually made a really nice payday today. It was so good that I was done by 11:30 and I went to get a massage. I mean, how else, what other career do you know that you can make money, be done by 11:30 and just say, what else am I going to do with my day? Why not get a massage? And it's only Monday. All right, so that's amazing. So let me start by telling you what I do. What I am really good at are credit spreads using SPX. Because usually when we're trading in the market, you can buy a call, right? Here we go, call. I'm going to call you up, which means that you want the market to go up. If you buy a put, I'm putting you down and means I want the market to go down. Right? So the only problem with that, or there's a couple problems, the one problem that I see that is an advantage to us is that when you're buying a call or put, you need to be right in a certain amount of time because there's certain values that a call, a put, and put have already in the option, and one of them is time. So if you're not right in a certain amount of time, that time is discounted from the true value of those options. So that's the negative, right? But in my strategy, as time goes by, I'm going to collect more and more of the premium. So another thing too, when you're buying a call or put, you're paying. I mean, everybody wants money, right? Isn't that the way the world turns? Everybody wants your money. If you want to participate in a call or put, you have to pay in. When you're doing a credit spread though, they're paying you, you're collecting premium. So that's the beauty of it. So already you're ahead of the game, right? Because you have money in your pocket, right? So then you take it another step. I like soccer. You can play football, hockey, whatever you want to play. To me, everything has to be a bit of a game to make it fun. Because if it's not fun, I'm just not really interested. Or I'll be interested and then I'll give it up. I'll be like, yeah, I'm over that. So what I am doing, I'm converting this chart into a soccer field. And in a soccer field, there's 2 nets, right? And here's one net and here's another net. Right? So the idea usually, let's say if this is mine, right? This is my team, my goalpost, I want to score up here. And if this was my goalpost, I would want to score down here. Great. Also, when you're playing soccer, you have your defenders, right? You have your halfback, your fullback, you have your goalie. You have people that are going to protect this goal so the ball won't go in there. What I see as defense is, you see this red line right here? That's the 300 SMA. This orange line is my 200. The blue line is my 100, and this pink one is my 50-day. Right, so today when we opened, I saw that we are moving up, but I also saw my big time players, the 200 and the 300. So think of them like fullbacks or the big boys, right? The big kids on the field, the big ones that you're always, when you see them, especially me, I'm short. So if I saw a 6-foot guy, girl, whatever, I'd be like, oh, mercy. So those are the people that you want that are going to be protecting your goal. So I said today, these two fullbacks, these two protectors are going to stop the ball from going down here. Great. So I am now bullish, but I'm saying bullish, or it could stay where it's at. It could even drop a little bit to be bearish. As long as it doesn't come down here, I make my money. So this front post right here, because if the ball went through the goal, it's as long as it passes the front goal, right? So this is the leg that's going to be short. That's the leg that's the one that's going to pay us, right? So this is going to pay us, let's say it's going to pay us $1 or times 100 because it's options, it's going to pay us $100. This back goal post is the one that's going to buy, right? Because you need 2 legs for this. Let's say you buy it for 30 cents. So what's left over? You have 70 cents left over, or $70. So as long as the stock, SPX, the index, the ETF stays above my goalpost, I'm making money. I keep 70 cents, $70, and depending on how many you want. Now, the maximum that you could lose, though, because SPX has a $500 spread, meaning from one level to the other. So 500 is the minimum. We have $500 minus what you just collected, which was 70. The max loss for this play would be $430. $430 is the max that you can lose in order to make $70. But again, as time goes by and the market keeps us, and the goal here, their fullbacks and our defense keep it away from our goalpost as time goes by. If I wanted to, midday sometime, I could close this earlier and say maybe I'll keep 50 cents of the 70 cents, or I'll keep 40 cents of the 70 cents. Whatever it works out to be, you are going to be able to collect that and not wait till 4 o'clock when it expires. But since you see how it came down to the defense right here, to the 200, bounced, 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 and just went back up. Even at the end where it came down a little bit, it still didn't touch the 200. So it comes ding ding, market is closed. I collected my 70 cents. I did buy a lot of these, so that's why I was able to make 5,000 today and was able to go get a massage. I was just so confident in the market today and the way that I know how the market is moving that I placed the trade. I set my alerts. I had my exit ready just in case when I was getting my massage. It comes down. Obviously, I'm not going to sit there and just let it all happen. But it was a day that it was just perfectly planned. And I could literally be done for the week and be like, okay, let's move on to next week already. Let me explain a little bit more. Actually, you know what? Let me stay and explain this. So we did this low side, right? The bottom side is actually called a put credit spread. I know when I said puts, I said that I wanted to go down. In this particular case, because it's a put that is giving me a credit as I'm protecting this goal, right? This is my area. I want this to be above. Again, doesn't matter if it comes near it, as long as it doesn't go into the goal or touch that top leg. Perfect, right? What if we said, I think it's going to range, which today was pretty much a ranging day. It went a little bit above it and just couldn't hold it. I could have played it at both sides. I could have placed the call credit. So the top side is called a call credit, meaning I want it to stay below my goalpost. So let's say we work that up again, and let's say, again, I'm going to make it simple. 100 is this front leg, and let's say the back leg, it was, I don't know, let's say it was 50 cents that I bought, right? Because we need two legs. You need to sell is the money that you're collecting, and then 50 cents or the leg that you're buying, making these numbers up again, is what it cost me to buy that second leg. So that's 50 cents or $50. So what if I had played both sides? That's $50 and $70. That's called an iron condor. And that means I played it both sides, making money on both sides. And ding, ding, you made your money. Congratulations. As far as finding levels to do, I showed you one way of doing this with the levels that I'm looking at my defense. It's also a good thing to look at delta. Delta is something that I look at just to confirm my levels, because when it comes to delta, one of the definitions of delta is if you're buying a call or you're buying a put, if it says delta of 20, it's a 20% probability that it's going to go your way, right? It's kind of like, I don't know about you, but 20% probability going your way, it's not very good. But what if you were to take the opposite side of that trade? Remember, in the stock market, there's always two sides to a trade. Somebody's buying and somebody's selling, right? You need that balance. So what if we take the other side, which is what I do with these credit spreads? Instead of it being 20% because of buying or buying a call or buying a put, I am selling a call or I'm selling a put. Flips now, it's 80% probability in my ball court, right? So let's say if I'm looking here, and let me not look for today because today is not going to be helpful. Let's see. Where is tomorrow? Okay, so let's look at tomorrow. If I had done the same thing, and the level that I picked was actually 55.95 and 55.90. So we're looking at the ask, right? The ask is how much we're selling it for. So if we did an ask at, let me move here. If we did it, yep, 55.95. So I would be selling this leg and I would be buying the one underneath it. That would give us $40 or 40 cents or $40. So if we're going to look at it this way, right, again with the ball court, think of where it changes, because at the money, 56.75, 56.75 is at the money. So that's midfield. As the ball would be coming down, right, this would be my goal post. So I want to show this to you in a different way, different format, in case you go and look at the chain and you're thinking, I'm not too sure. So this is the one you're selling, right? This leg. And technically this, because it's 500, notice it's 55.95, 55.90. This is the leg that we're going to be buying. So really our goal is this, wide. As the ball, let's say, happens to come down, as long as it doesn't come down into that level, we're peaches and cream, right? We're happy. So let me know if you have any questions. I'm going to be doing more videos about this because I need to explain some other things to you. But that's the gist of it. And it's been very, very, very successful. I really enjoy doing these because it's pretty much a slam dunk for me. And there's pretty little, I mean, there's not that many things in the stock market that are 100%, but this one gets really close for me and the way that I trade. And it's something that I'm able to do. Again, I can even go get a massage and be okay with it. As long as I have my alerts set and I have my levels that'll let me know, I'm perfect. So I'm hoping that you enjoyed this video, and I'll be back and I'll have more videos to share with you. Have a wonderful day. Bye-bye.